What is up? Welcome in, everybody, to the Creed of Crypto live stream. How you doing? I am Boi Crypto. I have here with me, as always, my friend and co-host Crypto Ewok, and down below is special guest Frank Molina, traditional finance extraordinaire. If you have been around the HEX PulseChain real DeFi ecosystem for I don't know, maybe the last 6 months or so. He'll have to correct me if I'm wrong, but you've probably seen Frank on a couple of streams here and there. Seen him tweeting about the PulseChain ecosystem and talking about things from a traditional finance perspective. And we welcome him in to the show tonight. While you guys get into the show, smash the like. We appreciate all of you being here. We do this every Tuesday at 8 p.m. Eastern Standard Time, but show Real DeFi some love by hitting the like, as well as our special guest, Frank. Frank, so great to have you here, man. We were saying off air, we've been interested in having you on for some time, and then you commented on the stream last week, and I'm like, hey, why not reach out to him and get him on the show? So I'm happy to have you here. And how are you this evening? How are you feeling about economics right now, macro, crypto, everything that we got going on in the world of finance right now?
Awesome. I'm happy to be here. I really enjoyed the show, so it's an honor to be here for tonight's episode. But yeah, every day I look and I see that the crypto community is growing, and then our particular community is growing even more. And just like somebody likes to say, green candles attracts a lot of people. So we get to see those people coming in when we bought at the bottom. So when they're buying their entry positions, my position is only getting larger. So that's one of the benefits of being early, right?
Yeah, man.
Exactly. Yeah. And that's why, Ewok and I, and anybody I think that's been paying attention to this market, I mean, we've all been buying aggressively here over the last 6 months, especially since PulseChain launched. So I want to get right into it here because I know you have a limited amount of time and I want to get your thoughts on this. I actually forgot about this happening this week because it's been such a non-event now for many months. But we do have the Fed and the next FOMC meeting coming up tomorrow, actually, where we'll find out if they're going to do anything with interest rates. Seems like not. I mean, they haven't for a while. And many people have been projecting not until maybe the springtime for some kind of movement. And obviously a cut is what many people are expecting by then. I'm curious to know, Frank, how much do you pay attention to that stuff? How much does it kind of affect your day-to-day in terms of investing? Obviously, it is going to affect all of us and have an effect across everybody in this country, in the United States. But tell me, what are your kind of expectations, maybe not only for tomorrow, but for the next couple of months with the Fed in terms of cutting rates and just kind of your view on macroeconomics here in 2024 and how it may even pan out going into 2025?
Absolutely. So those events, they are always, it causes the market to move. Of course, that's always the circumstance around it. But like somebody likes to say, those events are already priced in. There's just a justification for it whenever it happens, right? So whenever me as an investor, I look at it, a lot of people give me a lot of, feedback and trash about being such a long-term thinker. The benefit of being such a long-term thinker is that I don't have to worry about what's FOMC, what's the date, what's the interest rate going to do, because over a 5-10 year time period, I know the only thing that's going to happen is my position is going to get more valuable. Now, of course, in the intraday, it's going to affect. You have to have some really, really, really strong conviction to be able to see your portfolio whiplash 20, 30%, right? And a lot of the things that I've noticed over the past few weeks when we started pumping was everybody likes to complain about the volatility when it's on the downside, but nobody complains about the volatility when it's going upside. All right. So you can't have both. You can't be complaining and bitching about all these things when it's on the downside, but you see your portfolio going up 30, 40, 50% in a day. Right. So you can't reap with the rewards and at the same time complain about it when it's going down. And the person who has that conviction to be able to see their portfolio whiplash that aggressively is the person who's going to win. Me, for example, I see my portfolio move 5 figures daily. Right. So right. I've seen it go up tens of thousands. I've seen it go down tens of thousands. But at the end of the day, I get in it so early at the bottom that whatever it does in intraday, it doesn't really affect me because I know that I'm up, right? I'm up, whether it be 2x, 3x, whatever it may be at the current day. And if a lot of people had that same conviction, the ecosystem will eventually stabilize. And a lot of people will eventually reap the rewards of being something and finding the golden ticket that everybody searches their entire lives for. And luckily for us, we found the PulseChain HEX ecosystem, and then the people who looked into it, the people who did their research, who understood Richard Hart and what he was building, those are the people who are going to get rewarded 5-10 years from now. And a lot of people are saying it's going to be sooner. I hope it's sooner, but I'm not going to be disappointed if it doesn't do 1,000x first cycle, right? Because I'm thinking 1,000x for sure second cycle. That's how I think.
Yeah.
Let me ask you quick, and then Ewok, I want to go to you for the next question. Because you just something we bring up on this show a lot. You just kind of illustrated. Why do you think it is? And you're a bit of a seasoned investor, so that's why you have that experience, or maybe even some older folks that are in crypto have this experience too. But why do you think it is so many people in crypto? Like it's that big paradox of like, the gains come quicker in this than anything in human history. You know what I mean? It's the fastest appreciating asset that we have ever seen before. Why do you think it is that people get so impatient when you just said it yourself? You may be looking at an 8-10 year time horizon to make wealth that you never could in human history, or that it would take you 30, 40, 50 years to do. The time horizon is actually very quick for you to be able to change your life. Why is it you think that so many people get so angry, bent out of shape, for not making it sooner, when if you zoom out, they're actually making it far sooner than anybody has in history? What do you think that's about?
Ewok, you want to answer that, or you want me to go?
Go ahead.
Yeah, go ahead, Frank.
No, I think it's because the generation that we live in. So if you look at the people who are mostly invested into crypto, it's a lot of people who are younger than myself, right? So I am 27 going on 28. The people who are in it, a lot of them are those, early 20s, maybe some of them teenagers, and they have what is called a microwave mentality. They want it right now. They want something instant. They want instant gratification. They've never had to work in a position in their life where it was delayed. Growing up myself, I had to delay a lot of stuff, whether it was something that I wanted, maybe I had to work for it. Maybe it was a pair of shoes. Maybe it was a new iPad. I had to delay that gratification. So maybe it's not the same principles of Warren Buffett, right? Because that's extreme delayed gratification. But I learned from Warren Buffett. So his philosophy and a lot of the books that he has and that I've read, I had to train myself to think that way. And once you train yourself to think that way, and you compare what you have in comparison to what this best performing asset, second to crypto, would be the stock market, real estate. What for us to double what 100% return in the stock market takes 7 to 14 years, right? We do that in a week, 2 weeks, right? So anybody who gets disappointed about it that it doesn't happen fast enough, is because they still treat it like a casino. They don't understand what they hold. And the beautiful thing about, from my perspective, is that I've done so many different businesses, different types of investment philosophies. I've done trading. I've leveraged trade. I mean, I've lost $100,000 clips trading FX on leverage, so volatility to me isn't really a big issue, especially when I notice that I'm not realizing that loss until I actually click sell. So for me, it's just a matter of just holding on, right? But the person who hasn't lived through all of that life experience, the person who hasn't gone and lost over and over and over again and discovered, okay, what is my exit? What is the ticket to financial freedom? What type of business is it? What type of investment is it? I've done it for a decade. So when I found it, I wasn't going to let go. Now the people coming in, they haven't had that. So they just think, oh, it's a meme coin. Let me get my position and get out really quick. But they don't understand this. And all of crypto, 99.9 of it is bullshit. So if you spend the time to do a year's worth of research to understand what really crypto is and what it was designed to do and what problem it was solving, you're going to realize that what the PulseChain HEX and PulseX assets, those are not going to be something that's a first cycle thing or a couple months and is going to tank, right? The moment you understand, oh, okay, this is the equivalent of buying Tesla, Microsoft early on, that's when you're going to treat it significantly differently. That's when you treat it like the diamond that it is. A lot of people right now, if you think, what's the average 22-year-old kid who's holding it? They're thinking, I hate my job, I hate my life, I want my million and get out. To me, it's like, nah. If I treat this the same way I would treat a 401k, a traditional financial product, and I'm in it for 30 years, the only difference between a 401k and PulseX is the fact that I'm going to be 100 times richer in PulseX.
Yeah.
But the same delayed gratification goes in the same thing. You have to just wait. And that's why I'm a big advocate for having a job that you can tolerate, that you enjoy. So you don't have to touch your crypto assets. You just live off the revenue from your job. And then there's a lot more satisfaction knowing that you're wealthy, but you don't need to touch into it, than knowing that you're rich and you have to spend it. So I hope a lot of people understand what that means.
Yeah, I've said that a lot too about how people, I think this cycle is going to be interesting. I think they're going to take a lot more than they really need, because they may have thought they made a mistake last time and didn't take enough. And rather than just taking a little, peeling yield, restaking, things like that, letting the price appreciate, I think it's going to happen a lot more this cycle. The next cycle, the third cycle, I think is going to be banger, because there's going to be so many people that are probably out, that are going to fly back in once they realize that they've blown everything that they took out, because they, aren't used to having those kind of gains. And it's going to just explode. That's my opinion anyway of this whole ecosystem. I think the third cycle for HEX anyway, second cycle for Pulse and PulseX are just going to be spectacular because of that. There's going to be so many people running for the door to get out, and they're gonna be really sorry that they did that. So.
And it's funny too, because you made the 401k comparison. The other big thing is you're actually allowed to touch your money if you're invested in PulseX as opposed to the 401k. Yeah. So you're actually allowed to access it. But Ewok, did you go ahead with the next question here? We wanted to touch on more of the traditional finance and some of the people that might be in your circles too, Frank. But go ahead, Ewok.
Yeah. So since you've got so many traditional finance people in your circle of normal life, how many of them call you a crazy loon bird for getting into crypto, and how many of them are actually, dipping their toes in the water a little bit? And then to on top of that is, how do you think over the next few years, maybe not even decade, 5 to 10 years though, how do you think they'll adjust?
That's very interesting, because I'm going to go and give everybody the reasoning why I have so much conviction. It has actually nothing to do with traditional finance. It has nothing to do with, it's crypto. It has nothing to do with that. It actually has to do with understanding the money supply. And then the person who can best explain that is Michael Saylor. You understand his philosophy, why he's in Bitcoin. You're going to understand why crypto as a whole is significantly is the golden ticket as a whole. You go even deeper, then you have PulseX, PulseChain, and HEX, right? That's just the golden ticket on top of the golden ticket. But when you understand that when money is being devalued at a rate that is equivalent or very close to the appreciation of the index funds, the S&P 500, and that light bulb goes off in your head and you realize that the appreciation in assets and the appreciation in real estate has actually nothing to do with your intelligence. It has nothing to do with your positioning. It has nothing to do with how smart you are. It has nothing to do with any of that. It actually just has to do with the fact that the Fed is devaluing your currency. You're nothing special. They're doing all the work for you. When you come to that realization and you realize that you're being scammed because they're keeping you in the rat race, because they have you locked into the 401k for 30, 40 years. There's not a coincidence by that. They have you in there trapped for 40 years as a slave. So then at 40 years, you are able to withdraw the same money that was valued when it started. All you did was keep up with inflation. And if you look at it, what is the only thing that's going to outperform the standard market? That's real estate and stocks. It's going to be your own business, private equity, venture capital. Your own business, you are taking a big gamble that your intelligence is significantly better than what Richard Hart created, if that's what you're comparing. Richard Hart products and your own intelligence. And I can tell you, I'm a fairly smart man, and I failed in business plenty of times. So if you're going to outbeat me and other people who are very, very, very smart, well, I wish you the best of luck. Do I think you're going to outperform over a 10-year period better than what Richard Hart created? No, you're not going to. You may outperform short term, but you're not going to outperform long term. And you may not have as much volatility, but over a long period of time, your ROI in your business will not perform better than the investments that you had left if you had left it in the PulseChain, PulseX, and HEX community over a 10-year period. Right. So that's one of the main reasons for me as to I have no issue with just waiting, sitting back, because I know at the end of the day, the money printing is going to devalue that currency. And any asset that is priced against that currency has no choice but to go up. It's the same thing with real estate. It's the same thing with stocks. Everything in this life that is priced against fiat goes up. That's why the price of eggs goes up. That's why the value of real estate goes up. It's not because you're smarter. It's not what it is. You're not that smart. You're not that special. And the moment people realize that their investments isn't because they're really smart, it's because the devalue of the currency is what causing that appreciation. You can take a moment and step back and say, okay, what can I invest that's going to outperform the standard market and real estate? So the only thing that was up until before crypto was created was venture capital and private equity. But as we've heard Richard Hart talk about it, that's no longer the case. Crypto changed all of that. Bitcoin changed all of that. So now you have the ability to get the same purpose of what Bitcoin was created 12 years later with the new product with Richard Hart's assets, PulseChain, PulseX, and HEX. So that's my conviction as to why I'm all in, right? Because I know from experience, from knowledge, from wisdom, from trial and error, that I know that there's nothing else out there that's going to outbeat this and that's going to be here for the test of time. Then everybody in my circle, when I came to that realization, they still don't realize that. They still believe like, oh no, investing is the way to go. It's the safe way. They still don't understand that their appreciation in their investments comes from the devalue of the currency. So I slowly just started, separating myself from them. And I started educating people in my life who wanted to listen to what I had to teach them. And some of those people was my brothers. Both of my brothers, they didn't know anything about crypto. They didn't know anything about business. They didn't know anything about that. They saw me for 10 years try over and over again, some wins, many losses. And then when I told them, look, man, I don't need you to be smart. I just need you to take action. And they just took action. Both of them bought the bottom of PulseX. Now they're sitting 3x on their investment.
Nice.
And so at the end of the day, this game that we're in, this investment that we're in, people who treat it like a casino, they're going to lose.
Yeah.
But the people who are not necessarily the smartest, but the action takers are the ones that win. You don't have to be the smartest guy in the room. You just have to be the guy who believes, or at least believe the guy who actually has put in the time to actually understand it, right?
Yep.
That's the case in my family. It's like my brothers understood that I put in the time to understand what I hold, how this ties not just in crypto but to macro, how this ties to the money supply, how this ties to everything outside of as a whole as investments. And I wish I could give everybody that same wisdom and that light bulb moment that I had. And I try to convict that through my passion and through my enthusiasm when I talk about it. And some people grasp onto it and some people don't. And the people who don't, I just leave behind. And, at the end of the day, in 10 years, they're going to be the ones, after PulseX is at $1 and they're buying,
right?
I'm dumping on you, right?
They'll be the ones calling you lucky, right?
Yeah. I talked about that with Westcott a few weeks ago. It's like, I don't want anybody to call me lucky.
Yep.
Because you cannot call me lucky when I held through 70-80% drops, when I held through everybody calling it a scam, when I held through when the SEC launched and price tanked about 60% in a single day, and I still had the conviction. No, you can't call somebody lucky that, because the only people who have the balls to hold all through that is the people who educated themselves to understand what they hold.
That's right. Amen.
Well said, man. I could go so many directions there, but you're so right. Like, and we hear that often. Like, it's not necessarily having brains; it's the balls. Really, it's just having the conviction and sticking around. And I appreciate that. And that's cool. You got your brothers on board as well. I want to ask you this because it seems like how much of an understanding or like how involved were you with crypto before you kind of found Richard Hart's stuff? Like, were you around, or maybe waiting in the wings or something in the last cycle when Hex was around, and maybe see anything of Richard Hart? Or was it really more the creation of PulseChain? What was it? When did you understand like what DeFi was, and that this creation was really the real way to do DeFi and crypto? Because, a noob coming into this now is just going to pull up like Coin Market Cap and be like, oh, okay, let me get involved. Maybe Polygon Matic, that looks like a layer 2 that's up there, or just some of these other, I can't even name them all, but Solana and some of the other ones that are up top. How did you get your education wise? Like, how did you get to the point where you were like, oh, okay, like Richard Hart's the guy I want to follow? When did you realize that he was the person you wanted to, put your investment into with the products that he helped create? When did you realize that that was the way that you wanted to take it in your kind of crypto journey of understanding?
Yeah, I would say I've been involved since 2017 is when I discovered Bitcoin. 2017. And it's very difficult to miss it when you're involved in traditional finance. So when you're always looking at the index funds, and Bloomberg's playing in my background all the time. That's all I play in my house. It's very difficult to not hear about crypto, right? And during that time when I first discovered it, it was just always, oh, stocks is the way to go. Stocks is the way to go. Crypto's bullshit. Crypto's a scam. Why are they even talking about it? And just like everybody, right? So what's interesting is that people like in this video chat right now, the people who are listening, who are newbies, man, they don't realize that they can save 8 years of fuck ups just by taking action onto what we have to say. Crypto Coffee, Matt, he did 6-7 years of trial and error before he discovered Hex, right? And he's trying to give everybody the shortcuts. We're doing the same thing. Just like I gave my brothers the shortcuts of trial and error, there are people who, if they just listen to what we have to say, they get that shortcut. And so I was involved in Bitcoin, and my first ever attempt in crypto was to do arbitrage trading between the exchanges. I saw that there was a mispricing in the assets between different exchanges, and I wanted to capitalize on that, on the spread, and use volume to create an income. Just like many who try trading, it's not going to go for you, because you're going to lose a lot of money on slippage. You're going to lose money on trading fees, and at the end of the day, you have to have significant amount of capital to even capitalize on the small basis points that it moves, right? So for years, all I did was watch from a distance. Then I tried to trade Ethereum. I tried to trade Bitcoin, which was stupid because the volatility was so heavy that one wick would take out your position. All right. So when I said I've lost $100,000 clips, it was through trading FX and trading crypto. And it wasn't until a couple years later that I didn't want anything to do with it. I didn't want to touch crypto. I didn't want to touch Bitcoin. And then 2 years ago to the day, a friend told me that he learned from another friend that he introduced him to PulseX sacrifice. And he said, hey, we've known each other for a long time, because that was his friend from many, many years ago. And he said, Johnny Chaos. I love his stuff.
Yeah, he's good.
But anyways, he said, hey, I'm gonna throw this to you. You do what you want. And my friend ended up putting a couple thousand into the sacrifice, and then he introduced me to PulseX in like December of so I missed the PulseChain sacrifice. And I put my annual bonus that I got that year, and I put it into the sacrifice. And then I decided, okay, if I'm gonna go deep into this, let me look up exactly what I'm getting into. And then I ended up going down a massive rabbit hole of who Richard Hart was. And I've mentioned it before, like you have to spend more than 2-3 hours when you come across him, because he reels you in with the noise, but we have to listen to his streams to actually understand the rationale behind it, the logic behind it. So while we were waiting for the launch, I spent all that next year just learning as much as I could about PulseChain, what Ethereum was, why is it a copy of Ethereum, what is Bitcoin, because up until that point I didn't really understand it. And then the last year, which was the year prior to the launch, is when I started going heavy into understanding what PulseX was, why it's so special, why is it a copy of Uniswap, and all these different things. And the closer we got to launch, the more convicted I had. And luckily enough, there wasn't an opportunity for me to invest, so I was just accumulating cash. By the time it launched, I was just DCAing bullets, like
Nice.
bullets. And then I had the more I learned about why Michael Saylor was in Bitcoin, the more conviction I had. So that big light bulb moment happened, understanding devaluing of fiat and why everything priced against it goes up. And then that's when I decided, you know what? I don't need a 401k. I don't need traditional finance. They both operate the exact same way. I have to hold for the exact same time for both of them. Might as well go into the asset that's going to give me 100x the returns.
Awesome.
What you're saying and the point you keep returning to makes so much sense. And I think for a lot of maybe the younger or inexperienced investors in crypto that have that lottery ticket mindset, it would help so much, because all you're saying is like the depreciation of fiat, like just by simply holding crypto, you know what I mean? You're already winning as a hedge against that devalue, because, you know, and there's really nothing else in the world that's going to perform better than that. And obviously we feel like we're in the best ecosystem there is. And I agree with what you said about Richard Hart so much. I mean, there is that, you know, he is a master salesman, and he does have that, he does reel you in with the personality and whatever. Everybody uses the phrase like outrage marketing that he was doing a couple of years ago, but he does reel you in with that. But I just don't think that we can be as ignorant and dismissive these days, especially, you know, we've had a pretty popular president in this country, Donald Trump, who may very well be again here in a matter of months, that does similar things, that kind of reels you in. And then you hear the guy speak and you're like, you know what, maybe there's a little bit more to this. And certainly on Richard Hart's streams, there is a lot there. So I appreciate that. Let me ask you this. So, you know, we're here for multiple cycles. We're here the long term. You've talked about that well. But obviously for the price to go up, you know, new investors are going to come in and have to come in, and they certainly are and will. Right now, we're starting to see bigger influencers, and I know you're not, I don't know how often you're on Twitter. We don't see, you know, tweets from you all the time, but you may still be lurking in the background. But I don't know how much you're versed with what's been happening, because we are getting some bigger influencers suddenly talking about PulseChain now, suddenly, because I think the price went up as part of it. But Ivan on Tech, he's been around for a while, but a guy with a lot of influence. He's likes Richard Hart, has talked about HEX for some time. Now we have BitBoy just the other day, this week, started to release PulseChain videos. Wendy O, just a couple of hours ago, was on a stream with Corey Costa from our own community, who always does a great job talking to new people to kind of bridge them over. What do you make of the growth of this ecosystem kind of socially right now? And do you think that we're going to see a continued kind of lifting of the veil from mainstream crypto around PulseChain? Because it seems like it's already starting to happen a bit here. And obviously with Richard and the SEC thing and him taking them head on and kind of fighting for really everybody in crypto, whether they want to realize it or not. Do you think that we do get a bigger, I guess, mainstream acknowledgement of this ecosystem this time around, where HEX was totally gatekept last time around? Do you think we start to see, again, that veil kind of come down with this ecosystem in this coming bull cycle?
Yeah, so there's been people who've been around for such a long time, right? And who studied crypto significantly more than I have. And a lot of these people that you mentioned, these big names, they've been around for a very long time, and they've studied this extensively. So I find it very, very, very difficult to believe that the realization that I had of what Bitcoin was created, for me to get it in the amount of time that I did, and if they even understand that themselves, which I'm pretty sure that they do, they understand PulseChain, HEX, and PulseX. Now, the reason why they never talked about it is because it's one of those topics that is controversial, right? But it doesn't mean that they didn't understand it. It didn't mean that they didn't hold it themselves. They just never talked about it. So I give you an analogy. There's a lot of men out there who absolutely love what Andrew Tate has to say, but they don't talk about it because it's one of those things that catches attention. It catches the wrong eye. It gets the wrong people involved. So I've mentioned many times that I think Richard Hart is the Donald Trump, the Andrew Tate of crypto. So he has a lot of stuff that everybody who understands crypto, even on a surface level, understands that what he created is a real thing, is real DeFi. But just because of all the controversy that's behind it, they can't talk about it. And especially if you have a business that's relied on outside sponsors.
Yeah.
So when you have a lot of people saying, hey, we'll give you money if you talk about this, but you can't talk about this, because even the people who created the fake stuff, they all know that Richard Hart's products is the real thing. Yeah. So if you think about it from a market share perspective, that's those Richard Hart's products are taking away market share from the bullshit products that are being promoted on those shows. So it takes about 2-3 cycles until people say, you know what, this is no longer bullshit. This is actually has some value. And now that we're seeing Hex on a second cycle, it didn't die. Everything that should have killed it, and it didn't, right? It's still here.
Right. Definitely.
So like you're going to see a lot of people start talking about it more openly.
Yeah.
Right. Because now it has credibility. And then just imagine what's going to happen when we beat the SEC. Right. Because the SEC is it's what you call it's the circus. It's what the upper people who are in control of all of these different things, they use that to distract you, right? And that's how I see it. They created the SEC scenario. What are you going to do? You can't stop PulseChain. You can't stop PulseX. You can't stop HEX. So what exactly are you doing? You're just creating a bunch of noise. So this noise is meant to distract the people, to create chaos, to create volatility. And usually in those moments of turmoil is when the people who actually understand the product is when they're capitalizing on it, such as myself, such as people like yourselves, people who actually were buying the dip, right? People who understood that you can't shut it off. That's what real DeFi is. It's truly decentralized finance. And so in the combination with all that is that in the future, when it becomes, I guess, normal to talk about HEX, when it becomes acceptable to talk about HEX, you're going to see everybody say, oh yeah, I always believed.
Yeah.
Yeah. Meanwhile, we know, and you brought up a good point, the producers have absolutely told them. We know for a fact that the producers of some of these big names have told them, you can't talk about it. You know, it kind of ruins their model. And, you know, here's the one thing about BitBoy that I will add on. Rags brought up a very good comment the other day about it, and I wanted to share it with everybody here if they didn't hear it. BitBoy's like the millionaire who lost it all. You know, how many millionaires that lost it all can say, I could become a millionaire again in no time? Well, remember, his follower count was over 1 million. And I think that he's done it. So he knows what it takes to get it there. You know, as much controversy as it brings, that's 1 million people that, you know, are going to hear now that he's talking about it. He wants to make a documentary about how it's not a security. There's a lot of things, you know. So, you know, as a community, we have to kind of embrace that. Even with the bad comes all the good and the views. So I think people just need to remember that where he was, and, you know, he'll get there. He'll get there again. And we sure can, you know, use the extra eyes on it. So.
Yeah. And what's ironic is that the HEX community is what's going to give him that catapult to getting back to that.
Yeah.
Because we're, I mean, you see it even when I look on Twitter every now and then, I see one of the guys, something Boi Crypto, he says, look at the engagement, and he just hashtags our community, and then he just blows up from that little tweet. But that's just, it goes to show that we're the biggest community is that exist out there.
Oh yeah.
So everybody else has to survive on basically VC funding and dumping on retail. We survive because the actual product is the real deal. And not many cryptos can say that.
Well, we were bonded by COVID. you know, when COVID happened, we all kind of, this community is when it really formed at its core. We were all bored at home, sitting in front of a computer, and, you know, many people became really good friends. The streamers started talking. We became this, you know, grassroots community who locked their funds up for 15 years. Well, now guess what you've got? You've got a group of people that are locked up for a very long time and very passionate about what they believe in. And, you know, you can't get that anywhere else. You know, people comment all the time how loud the Hexicans are, you know, when they want to be. It's amazing. So yeah, there's just nothing else out there like it.
Ewok, you want to go ahead with the next question? I wanted to shift gears here. I DM'd you if you want to check which one I mean. We want to shift gears a little bit real quick and talk about, like, because we are in a bull market now and because prices are going to be going up and people are at some point going to want to be exiting this market to a degree anyway. You know, I mean, we still do have, like you mentioned earlier, Frank, like crazy volatility here. So, you know, I think it behooves people to, you know, just kind of let things sit and never look at it and walk away, as much as we also do have a long-term mindset. But we wanted to talk a little bit about, like, kind of scaling out strategies and possibly where to park money, like in a bear market, and different strategies that kind of blend like crypto and some of these real world assets, even though we're not really interested in being in the real world assets long term. But go ahead, Ewok, if you have that.
Well, go ahead. You finished it pretty much.
Okay,
That's
no
the majority. Yeah, go ahead.
I didn't mean to bogart the question.
You're good.
But yeah, again, people could get to like levels they never dreamed of this cycle, like, you know, monetary, like that instantly rich syndrome or sudden wealth syndrome, whatever. And they may want to retire or step away, or at the very least, like, take some off the top and then invest back in at the bottom of the next bear market. But really making that call, and I'm not asking you to say this for anybody in specific, because obviously we don't do that here, but how careful do you think people should be about, like, quitting a job or ridiculously upscaling their life, you know, when they're getting out of the bull market this cycle or the next cycle or whatever it may be? And then where do you think people would be best kind of parking their money, not financially advising, maybe just talking about your own experiences, but in that meantime, while the market kind of corrects itself into a bear market and then maybe wanting to reinvest again? Could you talk a little bit about, since you obviously have a lot of it, personal finance skills, to make sure that people don't ruin their lives, for lack of a better way of saying it, as we get to the top of this bull market, where they, you know, quit their job, upscale their lives too much, and then they just have nothing the next thing you know? How would you go about some of those strategies?
Yeah, it's a fantastic question. I can only speak from experience, and nothing that I say should be taken without consulting their own personal advisor. But from experience, I'll be one to say that in my career, as I made more money, I started spending more money, right?
Mhm.
And if you don't take the wisdom from people who would tell you don't do that, you're going to set yourself back 5-10 years. I promise you. The most important thing when it comes to accumulating wealth, I think you should learn how to do your personal finances before anything. And the people who are desperate to get out of their job, and they're willing to just sell whatever it takes to get their number, just to exit their job, they're going to be the people who are going to regret it 5 years from now. And the reason why is because even if you manage to escape your job, if you don't know personal finance, so personal budget, you are going to blow that money very, very quickly, right? And then the people who say, you know what, I don't have to quit my job, but I can go blow it, you're going to go buy a bunch of useless stuff that's going to depreciate, and then you're going to be left with nothing. Mm-hmm. So I've done it. I'm telling you, I've done it. Okay. And I've done it at a smaller scale. So just imagine people who cash out $1 million, right? People think $1 million is a lot. $1 million is not a lot. You know, after taxes, after a few stupid things, that million quickly dwindles down to a couple 100,000. You know, and a couple 100,000 is not much. So I'll speak on what I'll do whenever I deem the time is appropriate to exit. First, I'll never market sell everything, because I'll lose 30-40% of my position just from slippage. Why the hell would I do that? Yeah. I'm not that desperate for a cash out. So I'll exit out slowly, to where I'll get close to a 1-to-1 ratio on each position that I'm sold. So each tranche that I'm selling should be a 1-to-1 ratio. If it's $1 million and I'm cashing out 100,000 at a time, I want that 100,000 to be as close to the value as to 1-to-1, not to pay so much in slippage or because I'm dumping too much into the liquidity pool. So the next thing is, whenever I do cash out, I want to live off the yield that value, the face value that cash produces. So if it's $1 million and you want to go the simple, basic, most boring way, conservative, put into the S&P, you can now live off 100,000 without ever touching the principal. Right. So anybody can go, if they're really that desperate to escape their job, they can go live off that 100,000 anywhere else in the world. El Salvador is a perfect example of that. You can cash out into Bitcoin and not have to pay any taxes. Right. I'm Salvadorian, so I would know. That's one way to exit, and it's a smart way to exit. But even then, the people who don't study personal finance, that's why I'm an advocate for Dave Ramsey, because I used to think he was a joke. And a lot of the stuff that he is when it comes to the business side doesn't pertain to the average person. But if you understand the basic principles of personal investing and personal finances, when it comes to accumulating a large sum of money, you are going to be able to handle and manage it and make it grow rather than just spending it. I would rather somebody take $1 million, put it into investment that's going to yield 10%, and then with that 10% go buy a Lambo and pay off the Lambo with the yield rather than buying the Lambo cash. Because then you're just blowing $250,000 and now you have nothing when you could have just, put it into the S&P, live off the yield, and then with the yield pay for the stuff that you want to have fun with. Every single person on YouTube who knows a little bit of money is going to tell you the same thing. Don't spend the principal, live off the yield, and go enjoy your life that way. Right? So that's the way I'm going to approach it. And there's multiple different assets out there that you could do the same way. And what this individual just said, money flows from the impatient to the patient. That's entirely correct. The people who understand that is the philosophy of Warren Buffett. People who want this quick, I can't wait any longer. I'm willing to take, massive loss on slippage because they can't have the patience to wait. They give up money, just literally leaving it on the table due to impatience. So that's my way of exiting, is that whenever I get to that point, and I'll have a career that I love. So I'm not desperate to cash out millions of dollars at a time. That's why if I have a corporate career and the same philosophy is taught to me, wait 30 years to your retirement, but I take that same philosophy into crypto, there's nothing that changes between the wait time. The only thing that changes is the substantial net worth that grows. Now, rather, I don't have to wait 30 years to exit my job if I want to. I can wait 10 years, right? But the beauty of it is not what you decide to do, but the choice in which you decide to do. The beauty isn't being rich, but it's the freedom that decides, okay, I want to do this, but I want to do that. You're not making decisions off of emotion or rationale. You're making decisions off of peace and financial stability. And that's a beautiful place to be, because you're not making decisions based off of certain circumstances. Maybe people who hate their jobs, they sell their position so early because they hate their job so much. Well, it'd be significantly better if you just found another job and then cash out a portion rather than the whole thing. Yeah. All right. And I know a lot of people who think just like you two agree with that statement. It's just a lot of people who end up doing the opposite is the newbies. It's the people who don't believe. It's the people who say, oh, this is not going to be here forever. Or they are just going to be the ones that you're going to see 5 years from now being a beggar again because they didn't learn the basic principles of budgeting and wealth accumulation.
I love what you're saying so much, because, you would want to say to somebody, and I've said it to myself, like, in this country, not that we're in some kind of a third world country necessarily, but we live in scarcity our whole lives. You live in scarcity, like you were saying, maybe working a job that you hate. People live in paycheck to paycheck. if you are lucky enough to have found this investment now and are heavily invested over the next 8, 10, 12, whatever it is, years, why would you want to then just undo all of that by upscaling your life so much that you're just right back in that scarcity position? You know, make some sacrifices here and there, you know, whether it is like the home that you're upgrading to, the meals you want to eat, like you were talking about a Lambo. Do you really need a Lambo? I mean, I think they're a bit clownish, to be frank. No pun intended there. But yeah, and I want to let me ask you this as a follow up, because Jeff Sanders made an interesting comment here. You pretty much touched on this, Frank, but he said, yes, you're right. Retirement strategy with 10% and the S&P. I'm assuming he means return. 4% roll. Are you one of those guys? And I know Dave Ramsey talks about it, but do you have familiarity with like he's talking about the 4% safe withdrawal rate? That I forget the name of the guy who developed that theory. I think it was back in the 80s or 90s. But they've toyed around with that number, 4.5%, 5%, essentially saying that like if you park all that money away for 30 years and withdraw at 4% a year, you're never going to run out, basically. I'm curious what you make of any of those rules. And because, you know, depending upon your age, and if you are getting out in a couple of cycles or so from now, you may be looking at more than a 30-year time horizon. That's why you also want to be very careful about like what ventures are you taking on after this. You know, what you got to have some other kind of money-making mechanism. Maybe it's just the yield. But yeah, what do you make of that 4% rule, or do you really pay a lot of mind to things like that?
Before you answer that, Frank, just a shout out to Noah Rodriguez for the $5 super chat. We appreciate it. Thank you.
Appreciate that, Noah.
Awesome. Good job, Noah. I'm going to speak a little bit of the people who are desperate, because those are the only people who are so eager to, you know, exit very quickly, not have delayed gratification. If the people who are so desperate to get out of their job and to retire, if you take $1 million and you retire off that 4%, you're living off of 40 grand a year. Now, to some people, retirement is freedom to do what they want without having to go to a job. For some people, retirement is living a life of luxury. Okay, well, if it's a life of luxury, I promise you, anywhere around the world, 40 grand a year, you can live like a king. You can live like a king on that amount of money, right? You don't have to live in the States. So if your people are so desperate to get out of your job, that $1 million threshold to put into S&P and then redraw at 4% should be enough for you to do whatever you want with your life, give you the time and freedom to decide what you want to do next. And then you can go travel around the world on a $40,000 a year salary. All right, that's what that 4% rule indicates. Me, I'm the type of guy that I could be worth $10 million, and if I love my job, I'm staying at my job. Right? That's just who I am. So until I have, you know what, I need $10 million for this massive project that's maybe like a nonprofit, then that's when I'll think of something differently, you know. But at the same time, 4% for those who want to be conservative, who just want to check out from the corporate world, who don't want to do anything with crypto, they just want their 1 or 2 cycles and then cash out their 1 million. It's enough. Like, it's enough for you to be comfortable. It's enough for you to be happy. So I always tell the people when they ask me like, hey, like, what is a good number? You have to reverse engineer your plan. What is your end goal? And then work backwards from there. You know, you can't, it's not the same plan for everybody else, because to some people, $1 million is a lot. To me, that's nothing. To me, that doesn't justify the amount of turmoil and all of the volatility that we took to get here, right? So it just depends on who you're talking to, what their end goal is, what for somebody who wants to be single their entire life, to somebody who wants to be a family man, 2 very different numbers, right? So, but as a whole, as a general, 4% withdrawal rate in an investment like the S&P is safe. It's conservative. It's not something that you should ever worry about touching your principal. Yeah.
Cool. Appreciate that. Frank, if you need to go, just let us know. We had a couple other questions for you, but if you need to drop off, that's perfectly fine. Just let us know. You've given us a lot of great stuff tonight, so we appreciate it.
We can do one more.
Okay. Ewok, go ahead. If you wanted to talk about the HEX Investment Trust, and we can kind of circle it back to, TradFi people and possibly something that could get them familiar with crypto.
Sure. So I heard, I think it was Ben Dubard, you were on with him. And I think you had mentioned that there was really no way to get some, normal traditional finance people in. And I had just wondered if you had heard of the HEX Investment Trust or done any research on it, knowing right now that it is only accredited investors, but it is the registered 506C, and it'll eventually be going public. I think when they reach, I forget what the threshold is, whether it's 10 million or whatever the number, but either way, it will be eventually going public. And I wanted to get your thoughts on it.
Yeah, I think that's a good dabble into for the people who are in TradFi, who are very wary. So I'll say this. A lot of people like to give wealthy TradFi people, criticism for not investing into real DeFi. But you also have to think from a different perspective too. There's a point of capital preservation and capital accumulation, right? So in other words, there's a point of wealth preservation and wealth accumulation.
Right.
So in my perspective, when I'm 55 years old, you can have the next Facebook in front of my face. But if I'm worth 20 million, I have no desire to be going and gambling my wealth. I'm at that point, my game is capital preservation. All right. Right now in my 20s, I don't have that net worth. So I can be more risky. Right. So I can be like, you know what? Let me go all in wealth accumulation. You build wealth and then you preserve the wealth. So I have to think at it from that perspective too, is the people who refuse to go, heavy into these real DeFi assets because they're very wealthy. They don't need to be gambling that. But the HEX Investment Trust is a great way for them to dab into it little by little, whether it's 1%, 2%, 3%. And then all they need to do is dabble into it. And anybody who has a decent level of investing, they're going to want to research what they're putting their money into it. They're not just going to put their money into it and then, say, oh, it is what it is, and not understand what they hold. So then over time, as years go by, and then they understand, oh, you know what? This is actually the next big thing. This HEX as a whole, the actual HEX, not the HEX Investment Trust, the actual HEX and the PulseChain and the PulseChain, those are real DeFi assets. Then they go in a little bit more because they understand it. But that was a good introduction because it allowed them to basically put their money in a risky but safe way at the same time.
Right.
Especially those who are older, who are not going to be wanting to deal with MetaMask and their private keys and their self-sovereignty wallets, all that stuff. This is a great opportunity for them to just invest, get curious about it. And once they get curious about it, they go down the rabbit hole. And then that's when they get really passionate about this is the next big thing.
Makes a lot of sense. Yeah. Have skin in the game. And then, you kind of once you actually put your money where your mouth is, you tend to, like you said, get more invested in whatever it is, figuratively and literally. So makes sense for sure.
Yeah. And I think about it from my perspective too. Like when I sacrificed, I didn't know what I was sacrificing for. Somebody just said, hey man, just trust me. Right. That's what I did. Bro. Trust me, bro. Right. But to me, as someone who's very, very knowledgeable in the investing world, I was very curious as to what I was putting my money into. So then I spent the next 2 years just going down the rabbit hole. And that's the same thing with the HEX Investment Trust. It builds that curiosity for them to go and build their own reasoning and rationale and come to their own conclusion. And then that's when you see people going into the real deep stuff. Like it's going to take some time, but we'll get there.
You did it backwards from a lot of people and what they say. I find it interesting and how that happens. So many people will try to do research forever first before they invest anything. And by the time they're done doing research, they missed whatever run up that was about to happen. And then they get frustrated and say, well, I missed it. I like the thought of let's go in, do it, and I'll learn all about it after that. Just in case. I do like that approach.
You know what? I would say that people who who are not desperate in life and have a fairly good income, they have the liberty to be like, you know what, I'm gonna put 2,000 to 5,000 and just risk it.
Yep.
Right. I can justify $2,000-3,000 easy because I can go spend that on food in a year. Right. I can go spend that on stupid shit in a year. So if you just ration out that way, I'm gonna lose this money anyways. But at least in this way, I have an upside of maybe 100x or 10,000x over a period of time. Then you put it that way. Because when I went into the PulseX sacrifice, I thought to myself, I can lose 2,000. 2,000 not gonna make much of a difference in my life. But if I'm right, 2,000 can easily turn into 250,000 to 2 million. And then on the upside, great side, it'd be, multiple millions. But at least I went in. Yep. At least right. I took action. And that's why I'm very proud of my brothers, is because they didn't do 2-3 years of research like I did. They said, you know what, I trust this dude and I'm gonna lose this money, but my downside is $2,000, which is not life-changing, but my upside, that is life-changing. And that's what people have to think, is like, at least get in. So you lock in that position early, even if it's $1,000. $1,000 at the bottom, man, that's life-changing for most people. So, and then when you spend the amount of time learning, then you get into this moment of, damn, I should have put in more. Because even someone like myself, I felt that I should have put in more at the bottom. And you reflect back, like, I could have cut down on this. I didn't have to spend money on this, and I could have put that money into investments. But at the same time, you also have to be grateful that you took action, grateful that you found it. And I hope a lot of people that watch this not only just watch it and decide to go do more hours of research, but watch it, take action, and then do research, because at least you locked in your position. And that position, as long as you don't sell, is going to be worth very, very valuable in the future.
Well said. Yeah, I think the paralysis by analysis thing really haunts a lot of people, and that is what most people do, and they don't, it's shit or get off the pot. And I'm with you 100% on that. At least get some skin in the game, and then you can kind of learn after that. So, man, well, hey, we really appreciate your time, Frank. Again, we've been wanting to have you on for a while, so appreciate you reaching out last week. Let everybody know kind of, where they can find you. Obviously, I mean, you're a great Twitter follow. I don't think you have enough followers. Last I looked, it was under 1,000 still. I know you don't tweet a ton, but you throw some gems out there sometime. And I was going to read this one I loved from you from a week or two ago, January 8th. But you've basically said this entire tweet at some point in this interview tonight. So I'm not going to read it. I shared it in the chat earlier, but you were talking about TradFi bros think they're smart because they invest there. Yeah, I loved it, man. It just like resonated so much. And then you said it all here tonight, basically. So it's funny. I love to hear your thoughts on the TradFi bros, because you seem to have a lot of criticism because it's where you come from and what you see every day. But then you also have a little bit of empathy too, because it's where you come from and you see it every day. So, I mean, you have a unique perspective on it. So, where can people find you, and how can they reach out to you if they want to just get your thoughts?
Actually, let's touch one last on that TradFi one. I think the reason why, I mean, a lot of people say I'm very mean, and my brother says that too, but it's because of the fact that a lot of the TradFi guys, they think they're smarter than everybody else. Yeah. They think, oh, you know what? I work at a big bank, or I work on Wall Street. I don't even work on Wall Street, but I know more about Wall Street than some of these guys, right? You put me head to face against some guys from Ivy League schools, they don't even know what the money supply is. And then that's what's shocking, is that just because you work at a Fortune 500 company, or you work on Wall Street, or you come from an Ivy League school, they think that they're exempt to the matrix of what we live in. And the people who understand the financial matrix, which is the rate of return in investments is directly correlated to the devaluing of the currency, are the ones who are going to be very successful. A lot of the TradFi guys, they don't understand that. They refuse to accept that, and they think they're smarter than the average person, or they think they're smarter than the crypto guys, just because of their career accomplishments, or the company that they work for, or the school that they went to. So I'm the type of guy that likes to humble a lot of people, right? So when you asked me earlier, hey, you know, what happens whenever your circle thinks you're crazy? In reality is I look at them as dumb as fuck, right? So, because they're still plugged in, and then
Right.
they're just gonna find out in the future that they were wrong this entire time. And that's where, you know, a lot of this cocky attitude that people who come from these big institutions refuse to be open-minded. How do I know? Because I was once that guy, right?
Yeah.
So I come from experience. I speak from experience, and that's why when I speak about things, I can say it in a very convicted way. I can say it very passionately because I once lived that life that these people used to live, you know. But yeah, as far as where everybody can find me, I always forget my Twitter handle. I think it's
I got it right here. I'll hook you up here. It's at F Molina 1996.
that's right. Yeah.
There you go.
So
We're
yeah,
getting old here.
anybody.
Is that your birth year? Don't tell me that's when you were born.
Yeah, I'm
Oh
96.
my God! Wow. Okay.
Yeah.
Wow. Well,
Yep.
me and Ewok are the seniors here tonight. But yeah, man, we just appreciate your thoughts so much for sure. We're glad to have you in this ecosystem, and you know, it's good to have a bridge to traditional finance and have somebody in it that does understand it. So I will say, you know, good luck to you and your continued efforts to try to educate the people that are at least willing to listen. But if you know, in your circles, if they're not though, like you said, they'll just have to buy the top, like so many people before them, unfortunately. But either way, I mean, your efforts are appreciated. So we do thank you very much for being here tonight, Frank.
Appreciate that. Thank you for having me on.
Absolutely.
Sure, pal. You can
For
drop
sure.
off. We'll go ahead and continue. Have a good night,
All
man.
right. Have a good night.
Take care.
All right, man. That was fantastic. Everything I
Good
hoped it would
stuff.
be. We think we
Yeah.
hit all the major points. Is there anything you wanted to follow up on? I thought maybe we'll just kind of improvise here, but maybe we'll just look at the prices and stuff, kind of do an upside down show from what we normally do.
Sure.
But any other takeaways that you had, Ewok, just from listening to Frank? I thought that was terrific.
No, I enjoy what he says, you know, about the people that he works with, because I was curious. I was really curious if they, you know, thought he was crazy or if he's already converted all of them, you know, and it seems that if they don't want to listen, he doesn't spend any time with them, and that's pretty cool. You know, you do become, and I forget who even said it. It's a popular saying, but you do become the five friends that you hang out with the most. You know,
Yeah.
you become the sixth. So if you hang out with a bunch of thugs or whatever, you're going to become the same thing. If you hang out with a bunch of wealthy people, well, it rubs off. So, you know, I just find it interesting. That was one of the points that, you know, I was curious too, is what his friends were, and if they were in the space. And it seems like, I bet some of them probably are, but you know, found it interesting.
It definitely is, yeah. And what he said, I really hope some viewers who, you know, let's face it. I mean, now the prices are going up, so people aren't having as tough of a time as they were like 3 months ago. But
Sure.
the thing he kept saying about like the money supply and just understanding that, you know, as the dollar, that invisible inflation. I mean, yeah, we do actually see it talked about every day, but I mean, like, a dollar is a dollar by the way it looks in your bank account, but just that invisible monster of the inflation, you know, that's just eating it up over time. And then realizing, like he said too, that a lot of these traditional investments, all you're really doing is keeping up with it. You're not surpassing it or, you know, getting a good hedge on it or anything. So, yeah, that's what we're here for. So
One of the points earlier in the week that I had seen and I thought was a amazing analogy, and I did want to share it tonight too. It's, you know, about hex and staking hex. Somebody had made the analogy to buying hex and not staking it, akin to buying a Bitcoin miner and never turning it on, or buying a rental property and never putting a tenant in there. You know, so I just thought it was pretty interesting how it was worded, and you know, the basis of hex is stake it, even if it's short. You know what I mean? You can go short term. It's not going to pay as much, but you know, you're underutilizing your asset if you aren't at least staking it, some of it, for a certain period of time.
well, I do think that that's a really good analogy, and it does make sense to me. And I'm certainly staked out, and I know obviously you are. But let's face it. I mean, like, you know, it's something that Sami does say sometimes, and I get where he's coming from. Like, criticize it however you want, but I mean, like, some people that may be coming in now, you know, see like, well, man, like EHEX, which we know that isn't necessarily a true look at the chart whenever we have the stock split and PulseChain coming out and combined hex and things like that now. You know, EHEX drops 99% or whatever. How am I going to lock this up? Like, I can't do that. I think we are going to see, you know, we don't foresee this splitting again. You know, there's two different versions of hex. The combined price is about 2.7, 2.8 cents right now. One lives on Ethereum, one lives on PulseChain. You know, you can invest in whichever one you want to. But I think it would make sense to just grab both. And yeah, I'm with you 100%, Ewok. I mean, like, I had some liquid hex at the beginning kind of the PulseChain launch. And yeah, if you have a bag that's substantial enough, there's no harm, you know, if you want to just even do it on a shorter term and say, like, when do I think the end of this bull market will be? And just stake it out a year, stake it out a year and a half, 2 years, whatever. If you don't want to go super long term, that's fine. That's totally up to you. You can use it however you want. But yeah, to me, I felt like it was burning a hole in my pocket if I didn't at least stake it to, you know, when I thought we'd be towards the top. So there, and you know, for anybody listening, I mean, you can reference, I can't remember if it was last week, a couple of weeks ago, we had a stream talking all about this and all kinds of different hex staking staking strategies, making a staking ladder. And we're going to put that video out with all those strategies here soon. But yeah, I'm with you. Might as well use it while it's there. So
yeah, and what's it going to hurt to throw a little chunk out? I mean, what if this thing does what Bitcoin does? You know, Richard says so often, I designed it to do better than Bitcoin. What if it really does? I mean, and who in their right mind would have thought 69,000 a Bitcoin when it was 50 cents, $1, $3, $6, whatever it was? You know, nobody in their right mind would have thought that. But so far, a lot of things have come true, and charts are looking very, very similar. It's kind of eerie. So,
yeah,
just a flyer, you know, throw something out there just in case, even if it's for your kids and you're not around. I thought that would be, you know, that's why I do it. So,
yeah, I'm with you. Let's pull up. You want to pull up the PulseChain prices real quick, and we'll just maybe take a look at a couple of them.
Well,
yeah,
I got the Bitcoin charts up first, so let's go over those real quick.
If you want, as you said that, I was going to say I don't care about Bitcoin, but okay, we'll go ahead and take a look at it just real quick. BTC fell a little bit recently, but it's interesting. I heard Axis Alive and Charlie from Cultivate Crypto and the Crypto Mindset group that he does with Miguel. They were on a little bit earlier, and I only caught the first half hour, but they were talking about like Bitcoin being at about 43K right now. I'm surprised. I mean, I'm surprised that we've seen this bounce back up. They were talking about thinking to go down to that level of support again at 38. And I do still ultimately think we're destined for the mid to lower 30s here over the next couple of months. ETH right now sitting at 2,300 or so. What do you make of those comments, Ewok? Because I am surprised that we're back up here right now. But what say you?
Yeah, well, you've got crosses on the, you know, the 50 and 200 EMAs. So, I mean, they're both turned pretty bullish. So, you know, the cross was back here for Ethereum, 2334. Bitcoin dominance is still growing. You know, from last week, we talked about it. I think we were just under 52%. Now we're at 52.5. So, I mean, it doesn't grow like the numbers of the dominance chart don't go crazy numbers, but when you're a full percent of dominance in a week is interesting, and this chart looks like it's about to cross too. So I feel something weird has to happen here before the halving, and we are definitely due for a pullback. It's just it's looking pretty bullish right now, though.
We're definitely in a weird year. I mean, we've had these like kind of battling narratives with crypto and the macro market. I mean, like, okay, I saw some Biden shill fake account or something the other day saying like, hey, Biden's economy, the stock market's at an all-time high. Dude, I mean, like, this is all smoke and mirrors. Like, this thing's going to come crashing down. You know, in a couple of months, we're going to get these rate cuts, and we're going to see a substantial pullback. I mean, we've talked about it ad nauseum, but after rate cuts, historically, we see a 27% dip in the stock market. That's pretty goddamn hefty for the stock market. Not us, but for the stock market, that's a lot. So we're on the verge of seeing that. But we'll see. We got a lot of conflicting things going on in our ecosystem, though. So PulseChain, as per usual, now that we're streaming, we got a little bit of a pullback. It usually happens every time we go on the air. But hey, it's been a bullish last couple of days. I had a strange feeling, as many I'm sure did, when RH started tweeting a couple things the other night. people seem to get bullish, and all of a sudden we start charging up. So Pulse was at that. Obviously, we've been above the SAC rate, but 3 zeros and 1-1 the other day. Now we were up at that 13 number, dipped below it here just over the last hour or so. But Pulse X, yet again, just like it did the last time when we ran up, running harder than mostly everything else other than like incentive token. And some of the memes. But it's 50% discount still from the SAC rate. As hard as it has run, it's still at a 50% discount from sacrifice rate. So yeah, you right here, right now can get a better buy than those of us who may have sacrificed 2 years ago for tokens. So there you go. Combined hexes, as I mentioned earlier, about 2.6 cents right now. So looking good, still bullish. I don't know if you wanted to pull up the PulseChain chart, probably be the best one to look at if you just want to look at daily or weekly there, and we'll just kind of size it up. But man, things are looking bullish all across right now. We're on the verge. Tomorrow is January 31st. We're going to have a monthly close where presumably this whole ecosystem is going to be closing with its best month in its history. So that is great to hear. So it looks like we got the weekly.
Yeah, it's a weekly candle. Is that good? You want to look at the daily?
Why don't we just go to the daily for a moment? But there we go. Yeah. So, I mean, it looks like, we've really found support. I mean, this is the thing we've talked about the last few weeks, but like, will we see that oscillation around the SAC rate for a few weeks? How will it be? So far, I think the jury's kind of still out, but we've seen it as support. I mean, we've seen it dip that there. You see that one mini wick down there where it did kind of go below it. Yep. I remember that morning looking at that, but since then, man, we have just sprung right off that. Yeah.
And something else that I've noticed too is when RH does put out some tweets, especially of charts, it's almost like he's predicting the future, and beware for the magic carpet ride. So if you're got some money on the sidelines, you might not want to wait very long.
Many people liked my comment, and I saw some comments in our video this week. Many people like my comparison to analyzing his tweets like I would Pink Floyd or Tool lyrics back in the day when I was getting into those bands and late at night doing some lyric reading and stuff like that. But yeah, I mean, with Richard Hart tweets, you always have to look a little bit deeper into them, and there's usually something possibly around the corner, or it may just be a self-fulfilling prophecy too. It's just like he tweets, people get bullish and starts buying. You know what I mean? So, but yeah, the chart's looking fantastic. I think we're on the verge of really breaking out here. And I mean, where do we go next level? I mean, like the all-time high is about 2.5x over the SAC rate, or I guess it'd be 1.5, whatever, 3 zeros and a 2.5 or something like that.
Well, I think we get held up at this. I think we get double the SAC rate, and I think we get held up a little bit. I think
that looks right.
Yeah, it's right in this area. You've got some original support, or it tested this, dropped, kind of tried to get back up there, and just bottomed there. So I think that magic number of double the SAC rate, I still think you're going to see some bigger wallets exiting at that point. Hopefully that becomes our resistance, and then once we flush those out, we can get it to turn to support, moving right on up then after that. But that's where I think we'll kind of get hung up. I think we're going to trickle a little bit. In the meantime, I don't think it's going to do a straight rocket right there, but I think that's our next major level of resistance.
Yeah, we may still have a little bit of time here to DCA into stuff, but I mean, it's really running out. I mean, we've talked about like leverage on these tokens over the last few weeks. We've talked about obviously PDI just hit new all-time highs, which is pretty interesting. Teddy Bear, HOA, just some of the kind of meme tokens on PulseChain that may return us a good investment on Pulse. We've talked about Icosa, which, my God, I mean, like, it still technically is undervalued when you compare it to Hex, but it's just run up so hard. I'm at like a 9x off of the buy I made on the Pulse version at 3 cents. And crazily enough, man, I don't know if you've checked those charts recently, Ewok, but Icosa is just about at parity. I mean, the Icosa is pretty much right there.
Let's take a look at it. I can pull it up.
We'll take a look at that real quick before we wrap up here. But there's just so much opportunity. Like, we're in the place now where, the thought process over the last 6
Hang on.
months,
Did you say the Ethereum side?
Yeah, you can pull up the EICOSA if you want to. I mean, we could look at both if you want, but
No, I don't have it saved on this one, but I can.
But I mean, the ethos kind of the last 6 months was just like, okay, everything you can DCA into PulseX and HEX, like just bam, 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 real easy, being careful, not wanting to go anywhere else, also being afraid of catching a falling knife. Now it's almost like, oh my God, I might get distracted by all the things I want to buy. You know what I mean? Because
Yeah.
things are bullish, things are going up, but just make sure, not advice to anybody else, but what we do personally is I still have somewhat of a tunnel vision. And like we talked about with Frank tonight, having a long-term view. So don't get so distracted that you're getting into dangerous stuff. But luckily, time-wise, it's almost like you can still get into something dangerous accidentally right now, and you'll still be okay, as long as it's not too much money, because we're right at the beginning of this whole thing, I think, taking off. So
yeah, we're about a 10x from the bottom levels back here in October. About a 10x from where we are right now.
yeah,
1100%, 11x, 1,113%.
And this is ICOSA on ETH.
Yes.
Okay. Yeah.
And this is versus USDC pair. I didn't pull up the ICOSA HEX pair, but
that's all right. Still, I mean, you can see dollar-wise where it's gone. I mean, it's just, it's exciting to see what Alex McWhorter does have in store for ICOSA and Hedron. Kind of combining them together is going to be really interesting. I did not even know that he has a PulseChain node warehouse laboratory type deal set up. Did you know this?
I did.
Yeah. Sami was, I must have missed all that, but he showed a video of it or something this week, and Alex just showing everything he has going on. It is so fucking cool. It is so cool looking.
I haven't seen it in a long time. I knew he had bought the space. I knew he had it. When I saw it, it was a bare shell. So I haven't seen anything recently, but I knew he was putting one together. It was pretty cool. So there's something recent that Sami put
I don't
out?
know when it was. I don't know when it was from. It could have been very well what you did see, but he was getting stuff installed. He had some things going on, but was still working on it. So
gotcha. I'll have to look for it.
Yeah. So even though that guy might be a little quiet on Twitter right now, there's definitely a lot of stuff going on behind the scenes. So
very cool.
Yeah, hard not to feel bullish after a stream like tonight. And great having Frank on. Appreciate all you guys. Everybody that's still here, do us a favor, smash the like. We appreciate all you guys being here. We do this every Tuesday night at 8 p.m. Eastern Standard Time. Just shouting out some people. We got Philly, Hex Girl, Rocket, Just Live, DJ Moonboy, of course, Carrie Reed, Humberto, of course, tonight, Jeff Sanders. Good stuff from you, Jeff, tonight. I liked your kind of legacy TradFi investment questions that you had when Frank was here. Noah Rodriguez, thanks for the super chat. Just appreciate all of you guys. There's so much good stuff going on right now. Go watch Axis Alive with Charlie earlier today. Watch Corey with Wendy O. I think there was another one I wanted to catch up on too that I'm forgetting right now.
I'm sure Maddie's probably streaming right now too. So if you're
he probably is.
Want to catch him live, he's probably on.
I wanted to shout out on the air too, RH Max, and I commented on his video the other day. He had on I can't remember his name, but the guy from Tetra that created the whole Tetra platform. RH Max has probably highlighted that guy in Tetra more than anybody else, and he had him on for the second time over the weekend, and they were talking about a little bit what we did with Frank tonight, and I was inspired by RH's video, RH Max's video, to talk about kind of scaling out of the market, planning for life, not after crypto, but like how to properly maybe upscale your life if you scale out of this market a little bit. And I loved their conversation, and I thought it made sense to go that direction with Frank tonight. So shout out to those guys for that. But yeah, any final thoughts from you tonight, Ewok?
No, man. Just looking forward to the green candles that are coming. And like I said, I have an onboard to talk to tomorrow. So that's exciting. People are getting the urge. Hey, I hear things are going up. Why don't you show me what's going on? So that's always nice to hear that starting as well. And so it's exciting.
Yeah, interesting the friends that we might make back here as we get into the bull market that we haven't talked to in a while. Yeah. All right. Well, hey, appreciate all you guys once again. Hit the like on your way out. We will see you all next week. It'll be February, the month of love. So get ready for Valentine's Day here. The month we got hearts, we got all pulse, we got all kind of hard stuff going on here. So appreciate you guys. We'll see you next week right here, Tuesday, 8 p.m. Eastern Standard Time on the Creed of Crypto live stream. See you guys.